Financial services provider First Capital Bank Limited has signed a 12.5 million euro deal with the European Investment Bank, the EIB, to assist Zimbabwe's SMEs and mid-cap companies. The facility has a tenure of 7 years. Funding will be availed in US dollars through the existing First Capital Bank Limited network. The gesture is supposed to underlie the softening of relations between Zimbabwe and the EU. Joining us to discuss further from Harare is Batanai Matsika, head of research at Morgan & Co. Investment Bank. Batanai, good afternoon to you. Thank you so much for joining us. Starting with First Capital Bank and this 12.5 million euro deal, how far will it go in your assessment in assisting SMEs in Zimbabwe?
Thank you so much. So it's a good move. I think, given the liquidity situation, especially amongst small businesses and even the mid caps within Zimbabwe, I think it's to go a long way in terms of boosting capacity and promoting a bit of productivity within different sectors of the economy. I think what's very encouraging, of course, is the tenure. We're basically looking at 7 years, which is quite attractive, given that there's a lack of long-term money within the local capital markets. So definitely, we think that certain sectors like agriculture, food production, definitely benefit from this credit line.
All right. Now, we have this on the screen now as we speak. So prior to this, there was a 15 million euro deal signed with CABS, which is a unit subsidiary of Old Mutual. Are these deals primarily signed with financial institutions?
Yes, so you find that a lot of development financial institutions, the DFIs, they tend to work directly with banks. It makes sense, of course, to work with financial institutions, given that they're more efficient in terms of allocating capital across different sectors of the economy. They already have the networks and existing clientele. So we've seen CABS benefiting. FCB, First Capital Bank, they also inked a deal, as well as NMB is also benefiting from a credit line. So it's quite encouraging that the financial system is being engaged and there are new credit lines coming on stream.
And how would you describe the health of SMEs in Zimbabwe, and I guess the challenges and opportunities that they're facing?
I think there's consensus that the SMEs are quite critical within the economy, given that they contribute roughly around 2/3 in terms of GDP contribution, and also towards employment. So there are a lot of challenges, and amongst those key constraints will be that of access to capital. Which is why we're quite upbeat about the credit line. But of course, within the SME space, I think what needs to be done is to formalize quite a number of operators on that front, so that they are engaged in the mainstream economy and they can also have access to some of these credit lines that are coming up.
Great stuff. All right, let's move to commodities. Q1 2022 platinum output up by 2%. How would you assess this growth? I mean, 2% doesn't sound like it's a lot, but how would you contextualize it?
Okay, so probably it's worth looking from a regional or maybe from a global basis. Even globally, in terms of output, it wasn't that encouraging. Down in South Africa, I think it was actually down. So there are a number of factors that could have contributed. Issues to do with COVID-19 related stoppages, and also the geopolitics. So really, it's worth looking at it from that perspective to say that even within the region, South Africa didn't do quite well. But of course, I know the mining players are also benefiting from the pricing. So it's not just enough to look at the volumes. It's also worth considering that there was some price movements as well.
All right. Now, the scrapping of that 5% levy on raw platinum outputs, it looks like it helped output. Was that, I guess, taken as a wise move from the government? And then what about the revenue implications?
Okay, so you find that, I think there's been a lot of lobbying by mining groups to say that, some of these sectors are overtaxed. And there are a lot of levies, and also the beneficiation and value addition will also play out in the long term, given that there's need for a significant capital outlay to set up refineries and the like. So in a way, it's worth considering those dynamics and also considering the forex retentions that these mining groups are subjected to. So definitely, yes, the government could have sort of scraped that one out, but they still benefit a lot, given that there are still a lot of taxes and levies that are still in place that are also helping government coffers.
All right. Now, the government has ambitions of a $12 billion mining economy, a mining industry by 2023. That's just next year. How realistic is that?
No, it's a tall order in the sense that if you're looking at the FDI flows that go into critical sectors of the economy like mining, we haven't seen a significant amount of investment in that area. I think what needs to be done is also try and strengthen the local equity capital markets. Basically, you find that in 2020, the government set up the Victoria Falls Stock Exchange as a way of trying to attract global capital. So there's a need for a lot of work in terms of promoting that exchange and also boosting FDI flows. But as it is, I think that's a tall order, but there's a lot of work that has to be done to attract new investment.
All right. Well, as they say, shoot for the stars and you'll fall on the clouds or so. All right. So tourism, the government says arrivals in Zimbabwe up 93%. Would you take this as a sign of a rebound for the sector and I guess the wider economy?
I think the good thing is that it's a positive, or of course, it's a low base effect given the impact of the COVID-19. But what we're seeing is that, given the slowdown in infections, we're now seeing a bit of arrivals improving, especially in strategic destinations such as Victoria Falls. But what has also happened is that there's been a drive around boosting domestic tourism, which I think is quite positive because you need to have sort of a balanced approach in terms of the focus. So yes, it's early days, but we feel that tourism has always been exciting from a long-term perspective. And definitely, if disposable incomes also improve on the domestic side, that will help tourism as well.
Are there any headwinds at all that could hamper the growth of tourism with this? I mean, can this number be maintained, basically?
Yeah, of course, there could be headwinds, especially from global or geopolitical point of view. If you're looking at towns such as Victoria Falls and the like, they tend to rely a lot on international arrivals. Of course, there are other issues to do with staff exodus that we saw. We saw a lot of individuals or workers moving out of the hospitality sectors to just look for greener pastures. So there could be some risks in the horizon, but as we look at it, we feel that from a long-term perspective, definitely there's an opportunity to earn more forex from tourism.
All right, and then very quickly, Old Mutual looking to cash in on this by signing more leisure deals. Is that a sign that more companies are going to sign deals like that?
Yeah, it's a sign. We've seen a lot of companies on the in the insurance sector. We've seen ZHL, Zimbabwe Holdings Limited. They set up a mall some time back. We're also seeing them moving into hotels and the like. So they're quite upbeat in terms of the opportunities within the sector, especially within Victoria Falls. As you know, Victoria Falls has been earmarked as a special economic zone. So there are a lot of incentives that come with investing in that area, but also the need to diversify income streams and actually earn hard currency is sort of the major rationale why these companies are moving hard into tourism and into Victoria Falls.
And finally, just about a minute ago, I think you already mentioned just a second ago, but with more influx of tourists, does that help the foreign exchange situation?
Yes, definitely. So you find that in terms of export earner or forex earners for Zimbabwe, you're basically looking at your minerals, diaspora remittances, NGO funding, and things like that. But also tourism contributes quite significantly. So that would sort of ease the liquidity crunch that we're seeing, especially on the official market. But definitely, I think it will play out in the medium to long term.
All right, Batanai Matsika, Head of Research at Morgan & Co. Investment Bank. We appreciate you coming on, joining us from Harare to talk about the latest out of the Zimbabwean economy. Thank you so much.